Trend line is one of the tools that traders use to make money consistently in the forex market. Not only in the forex market, but in stock, indices, and future market. In this video, I'm going to be sharing with you how you can be able to make $100 daily consistently using this trend line trading strategy. If you can be able to master trend line, how to use it, you'll be able to make money consistently in the forex market. So in this video, I'm going to be showing you how you can use the trend line to make money consistently. If you truly know how to read candles and charts, you'll be able to understand what trend line does during a trending market. So make sure you watch this video from the beginning to the end so that you understand what this video is talking about. So before we start, what is trend line? There are so many definition or meaning of trend line by so many experts, but the one I have here says trend line is a line drawn over highs or under lows of a trending market to show the prevailing direction of the price. And also, trend line are visual representation of support and resistance during a trending market. Trend line can be used as a visual representation of support and resistance in any time frame. They show direction and speed of price and also describe patterns during period of price contraction. Also, trend line is a price line which is made by connecting the market price low in an uptrend and market price high in a downtrend. A trend line is a chart pattern that is defined as a series of highs or lows that form a straight line. It is constructed by joining two or more price points together. So for you to be able to form a trend line, you must join 2 points together. That is the starting point of a trend line. So the last one I have here says trend line is a diagonal support or resistance level on a price chart. It is often used to identify support during an uptrend or resistance during a downtrend. Then trend line is a straight slanting line that connects at least 2 points and extend into the future to act as a line of support or resistance. So these are the different types of definition of trend line by so many experts, right? But the simplest one I will give to you is trend line are visual representation on a price chart that tells us support and resistance level. So trend line is a visual representation that helps us to identify support and resistance level. So once you understand the meaning of trend line, you'll be able to know how to use it on a price chart. So that is why I took a time to give you the meaning, different meaning of trend line, so that you understand the importance of trend line. And like I said, trend line works during a trending market, right? If the market is in an uptrend or downtrend, that is when trend line can be used. So we have 2 types of trend line. We have the bounce and the breakout. So when we talk about the bounce is when the trend line is acting as a resistance or support level for us, as a diagonal support and resistance level. So that is why I'll call it the bounce, because each time price comes to the trend line, the price bounce off from the trend line. So in this scenario, the price is now receiving support or resistance from the trend line. So that is why I'll call it trend line bounce. The second one is what we call the trend line breakout. So trend line breakout is when price breaks below a trend line or breaks above a trend line. So how do you trade these types of trend line? When we talk of the bounce, it means that the market is clearly in a direction. The market is still in a particular direction. If the market is in an uptrend, it means that the market is still in an uptrend, so you are only looking to buy. So you take your trade when the price makes a pullback to the trend line. That is what we call the bounce, because definitely the price will bounce off from the trend line. So you keep on trading the bounce, right? So until there is a breakout. So that takes us to the next type, which is the breakout. So the breakout now signals a change in trend. It tells us that the market have changed from a particular trend to another trend. If the market was previously in an uptrend and the price now makes a pullback to the trend line, instead of bouncing off from the trend line, the price now breaks below the trend line. This now signals that a new downtrend has begun, and that is the time you are expected to place a sell trade, because a new downtrend has begun. So if you are placing a buy trade, you are going to get hot because your stop loss will cry. So you have to understand the types of trend line and then know the one that you are trading with. So if you look clearly on this chart, you understand that the market is in a downtrend, right? So when the market is in a downtrend, the market is making lower high and lower low. So this is the lower high and this is the lower low. This is the lower high, this is the lower low. This is the lower high, this is the lower low. So now as the price is making lower high and lower low, lower high and lower low, you can now use a trend line and connect the highs. So this line is what we call the trend line. So you connect the lower highs, right? Connect the highs and extend it to the future. So you just need only two lines, this line and this line, to form a trend line, because you can't use just one point to form a trend line. You need for the price to make two swing high for you to form a trend line. Like now you can clearly see that the market is in a downtrend. So as the market got to this point and then got rejected, you can't be able to plot a trend line here because you have not seen any confirmation to confirm that the market is clearly in a downtrend until the market now makes a lower high, which is here, and then head back down. So with these two swing high, this one and this one, will now give you the clue that the market is going down. So that is when you can now plot out your trend line and connect it from this swing high to this swing high and then extend it to the future. So make sure you connect both the wick, because the mistake that some traders do is that they ignore wick, not knowing that wick is also part of price. Like in a higher time frame, if there is a wick, if you go to a lower time frame, you see that those wick are prices. So if you ignore to connect your trend line starting from the wick, honestly the price would break the trend line consistently. So that is why the point you are expected to connect the trend line is the wick. So you can clearly see that this is the wick. That is why the trend line was connected at the wick. This is the wick, this is a small wick. You can clearly see it. So make sure that you can see the wick, right? So make sure that the trend line is connected at the wick, right? Don't just ignore it and look only at the body. Make sure you connect the trend line from the wick, right? And then extend it to the future. Like I said, you must wait for a two swing point to form for you to be able to connect your trend line. So now that the first one has formed, the second one has formed, you can now connect your trend line and extend it to the future. So after that, what you will do is you wait for the price to make a retracement to the trend line. So now that you have already connected the swing high, the two swing high with a trend line, and you have extended the trend line to the future, you will simply wait for the price to make another pullback to the trend line. You can clearly see that the price went to the trend line, then got rejected, right? So this was the exact point where you drew the trend line. So after that, the price rallied down and then came up again, made another retracement up to test the trend line. So this is your entry, right? So this is where you are expected to place your sell trade. So once you place your sell trade here, your stop loss will be above the trend line. So you can target this low as your take profit, right? You can target this low as your take profit because this is the point where the price can reverse from, right? So you must understand that only 2 points is what is needed for you to be able to draw a trend line. If the market is in a downtrend, you need 2 swing high for you to draw a trend line. And if a market is in an uptrend, you need 2 swing low to draw your trend line. So always have that at the back of your mind. So this is what we call the trend line bounce, right? This is what we call the trend line bounce. So you can clearly see that each time price comes to the trend line, it bounces off from the trend line. Each time price comes to the trend line, it bounces off. Each time price comes to the trend line, it bounces off. So the price rally up to the trend line, it bounces out from the trend line. The price rally again to the trend line, it bounces out from the trend line. The price rally again to the trend line, it bounces out from the trend line. So you can clearly see here that the trend line is acting as a resistance level in this scenario, right? Unable to break, right? Price is finding it difficult to break above the trend line. So in this scenario, we call it the trend line bounce. So here you only look to sell because the trend line is acting as a resistance level. So the place you are expected to place your sell trade is at the trend line. Each time price makes a pullback to the trend line, that is when you are expected to place your sell trade. So this is how you trade using the trend line. So here, you can clearly see that this is an uptrend. This is an uptrend. Like I said, in an uptrend, you have to wait for 2 swing low to form for you to connect the trend line. So here is the first swing low, and this is the second swing low, right? So once you have confirmed these 2 swing low, you can now draw the trend line and connect it to the future, right? You can now connect the trend line from the first swing low to the second swing low and extend it to the future. So now the trend line will be acting as what? As a support level. So each time price comes to the trend line, it gets rejected. Each time price comes to the trend line, it gets rejected. Each time price comes to the trend line, it gets rejected. Each time price comes, it gets rejected. So in this scenario, the trend line will be acting as what? As a support level for buyers, because the market is clearly in an uptrend. So you are only looking to buy. And where do you buy? You buy at the trend line. You wait patiently for the price to make a retracement to the trend line for you to take your buy trade, right? So if the price is far away from the trend line, you have to do yourself a favor and stay away. Don't place any trade when the price is away from the trend line, because the trend line is your area of value. That is the area where you are expected to take your trades. So if the price is far away from the trend line, just ignore any temptation or any urge that will tempt you to take a trade. Just exercise patience, because definitely the price will come back to retest the trend line. No matter how long it takes, you must wait. That is why patience is very, very important in trading. So each time the price makes a pullback to the trend line, that is when you are expected to take a trade. So if the price is not close to the trend line, stay away from the trend line. So if the price is not close to the trend line, stay away, go and do other things until you have confirmed that the price has made a retracement to the trend line. That is when you are expected to take a trade, a buy trade. So in this scenario, we can clearly see that the trend line is now acting as a support level because price is unable to break through the trend line. So this is what we call the trend line bounce, because each time price comes to the trend line, it bounces off from it. So this is another example. Here you can see that the market is clearly in an uptrend, right? So you can see the first swing low, you can see the second swing low, you can see the third swing low, right? So you can simply connect the trend line from this first swing low to this second swing low and then extend it to the future, right? What you need is just this first swing low and this second swing low to connect your trend line. So once this first swing low forms and this second swing low forms, you simply plot out your trend line, connect it below the swing low and extend it to the future. Please don't ignore wick. You can clearly see that in this scenario, you can see that we connect it below the wick. Here again, we connect the trend line below the wick. So you simply connect the trend line below the wick. Do not ignore the wick. Like I told you, in a higher time frame, wick can be very, very important in a lower time frame. So any wick you identify in a higher time frame is very important in a lower time frame. That is why you need to include wick whenever you are drawing your trend line. So you connect the lows and the second lows and extend it to the future. So once you have done that, what you are now waiting for is for the price to make a retracement to the trend line for you to take your buy trade. right? So you can clearly see that the price now makes a pullback to the trend line. So this is when you're expected to take a buy trade, right? And price came again, makes a pullback to the trend line. This is another spot where you are expected to take a buy trade. The price makes rallied up again, came back again to the trend line. This is where you expect to take a buy trade, right? So the price now rallied all the way to this point, then came back again to the trend line. So this is where you're expected to take a buy trade. So you wait again for the price to make another pullback to the trend line for you to take a buy trade. And like I said, if the price is far away from the trend line, don't take any trade, right? Because if you do, you are going to get hurt. Like for instance, if the price is somewhere here, you don't have to do anything. Don't chase after price. Don't chase after price. You must exercise patience for the price to make a pullback to the trend line, because the trend line here is acting as what? As a support level for you. So a support level is an area of value where you are expected to take trade. So in this scenario, you must exercise patience for the price to make a retracement to the trend line before you take a buy trade, because some traders always fall in the temptation of in a hurry of taking trade. Like the price is still far away from the trend line, you see them rushing to take trade. They'll say, this market is in an uptrend, this market is in an uptrend, let me buy. They'll just be taking buy trade without considering the trend line, without waiting for the price to make a retracement to the trend line. For instance, now this price now rallied up. For instance, now you can see this long green candle, right? Some trader will say, wow, this is a bullish momentum, let me take a buy trade, because they saw a very bullish green candle. They will say this is a strong bullish momentum, let me take a buy trade, right? They'll just place a buy trade here, and what happened? The price collapsed down, take their stop loss, and then continue going up. And then they will not say again, the price is going up, let me take another buy trade. They will take a buy trade here, right? They will take a buy trade here. What happened? The price goes down again, takes their stop loss. So you can see that as you are taking buy trade here, the price will keep going down, taking you out, depending on the type of stop loss you are using, right? The price will keep on taking you out, because this is not where you are expected to take a trade, your buy trade. You must take your trade at an area of value, right? So if you are impatient in trading, you're going to lose a lot of money, because you do not understand the importance of patience in trading. Like if you take a buy trade here, right, and you have no stop loss, honestly speaking, depending on the time frame, right, if this is a daily time frame and you take a buy trade somewhere here and you don't have a stop loss, have it at the back of your mind that the market is going to wipe out your account, because the price is extremely far away from the trend line. This is the trend line, this is where you took a buy trade. So you can see the distance of the trend line, right? You can see that the price is far away from the trend line. So that is why you must exercise patience. Wait for the price to make a retracement to the trend line for you to take a buy trade. Always have patience. Don't always be in a hurry, having the feeling that the price cannot come. The price cannot come again, that the price is too far away from the trend line. No, what goes up must surely come down, right? So always have that at the back of your mind. Just imagine, look at all the distance that the price traveled to, even to the extent that the price got to this distance, right? Then what happened? The price rallied down and came to test the trend line before the up move continue. Let's use this for instance. Look at how the price rallied all the way to this point, right? So imagine some traders will be chasing after the trade because they feel that the price will not come back to the trend line. You see them taking buy trade, and as they're taking buy trade, the price will make pullback, take them out. They take another buy trade, price make pullback, take them out. Then what happened? You can clearly see that the price made a down move, right, back to the trend line, and then receive support from the trend line and continue to rally up. So this is the spot where you are expected to take a buy trade, right? This is where you are expected to take a buy trade. Forget about taking a short sell trade, right? Forget about taking a short sell trade, because some trader will say, okay, let me take a sell trade here, let me take a sell trade here, let me take a sell trade here. Honestly speaking, to be at the safer side, always trade in the direction of the trend. Don't try to trade against the trend, right? That is the surest way of becoming successful in trading. So once you can So once you master this strategy, you'll be able to make money consistently in the forex market, depending on your capital. If your capital is $10,000, you'll be making $100 daily, consistently, right? Before you know it, you'll be able to make ×2 of that your capital before the end of 2 months or 3 months. So this is why I keep on saying that practice makes perfect. So always take a time to practice what you have learned. You have a demo account, go there, look for any chart that you want to use. It can be any pair, Euro USD, GBP USD. Try as much as possible to make use of this trend line. Look for an area where price is trending, or look for a chart that is trending, either trending up or trending down, and use the trend line to connect the lows if the price is trending up, or connect the highs if price is trending down, and see the magic of trend line. If some of you think what I'm saying here is crap or rubbish, you can go to your chart, look for a trending market, a weak trend where there is a pullback, right, and use a trend line to connect those pullback, those swing low. If the market is in an uptrend, connect those swing low and extend it to the future, and then see the power or the wonders of a trend line. You clearly see how price is respecting the trend line consistently, giving you so many opportunity to take trade. Like here, we can clearly see that there is 1, 2, 3, 4, 5. There is 5 opportunity to take your trade. So let's assume that this is where you spot the market, right? So this is the first swing low. This is the first swing low, right? So we will not count this, and we will not count this one. So these are the 2 swing low that you first identified before you were able to draw your trend line. So this first low formed and this second low formed, and you draw your trend line. So let's start from here. 1, 2, 3, 4. So this is 4 opportunity for you to enter a buy trade. So now imagine if you took a buy trade here. Just imagine how much you would have made. Look at the point where the market got to. Imagine if you took a buy trade here. Imagine how much you would have made. Look at the point. Imagine if you took a buy trade here. Imagine if you took a buy trade here. Just imagine if you took a buy trade at this trend line. Look at where the price is. Imagine how much you would have made, right? So it is always important to know that the trend is your friend. That is why we only use trend line if the market is trending. So this is what we call the trend line bounce. Everything that I'm sharing with you here is called the trend line bounce. Like I told you, we have 2 types of trend line. We have the bounce and the breakout. So what I'm explaining right now is just the bounce. We'll go to the breakout very soon. So this is the example of a trend line bounce. Each time price comes to the trend line, it bounce off. Each time price comes to the trend line, it bounce off. Each time price comes to the trend line, it bounce off. And each time price comes, it bounce off. Each time price comes, it bounce off. So this is clearly what we call the trend line bounce. So here the trend line is acting as a support level, holding onto the price, right? So once you understand this, so look at this one again. This is another trend line bounce, right? So this is clearly a downtrend, right? And you are able to identify this swing high and this swing high. So these 2 swing high is what you need, this first one and this second one. Then you can use the trend line, connect the 2 and extend it to the future, right? So now each time price makes a pullback to the trend line, you take a sell trade. You can clearly see that this is where the price came to retest the trend line. So this is the perfect place to take a sell trade. This is another perfect place to take a sell trade, right? So each time price makes a pullback to the trend line, that is where you are expected to take a sell trade, because in this scenario the trend line is acting as a resistance level. So you are expected to take your sell trade at the trend line. So that's why I call it the trend line bounce, because the market is clearly in a downtrend and the trend line is acting as a resistance level. That is why the trend line is holding onto the price. So this is another example. This is an uptrend. You can clearly see that the trend line is acting as what? As a support level. So what you need here is 2 swing low, the first one and the second one. So these are the 2 swing low that you need, right? Once you are able to get these 2 swing low, you can use the trend line, connect this first swing low and this second swing low, and then extend it to the future. So what you will do is you exercise patience and wait for the price to make a retracement. So you can clearly see that what you need is these two swing low, this first one and this second one. This is the swing low that you need to connect for you to be able to draw your trend line. So once you connect this first swing low and this second swing low, you can then extend the trend line to the future. Make sure you are cashing the lows, including the wick. The wick is included. Make sure you are cashing the wick. The wick is included. So once you have connected this first and second swing low and you have extended it to the future, then you exercise patience and wait for price to make retracement to the trend line. So if the price now makes a retracement to the trend line, this is where you're expected to take a buy trade. If price makes another retracement to the trend line, this is where you're expected to take a buy trade. So you can see the price makes a retracement again to the trend line, and this is where you are expected to take a buy trade. This is another opportunity, and this is where you're expected to take a buy trade. So if you watch this candle, you see that this is what we call the hammer. This is a bullish reversal candlestick pattern. This is what we call a hammer. So with this hammer, you can clearly see that the uptrend is still in progress. So we can see that the trend line is acting as a support level, holding on to the price. That is why each time the price comes to the trend line, the price gets rejected, right? Each time price comes to the trend line, it gets rejected, because in this scenario, the trend line is acting as a support level, holding on to the price, as the price is making series of higher high and higher low, higher high and higher low. So that is why you need to understand the importance of trend line. So now I'm going to move forward to the break. We have talked so much about the trend line bounce. I've shared with you so many examples on how to trade the bounce, right? Like I said, in an uptrend, the market will be making series of lower high and lower low, lower high and lower low. So you connect the swing highs that will now form as a resistance level. So once you connect to swing high, extend it to the future, you wait for the price to make pullback to the trend line for you to take your sell trade. So in this scenario, the market is in a downtrend and the trend line is acting as what? As a resistance level. That is what we call the trend line bounce. So each time price comes to the trend line, it bounces off from it. That is if the market is in a downtrend. But if the market is in an uptrend, you have to connect two swing lows. Connect two swing lows and then extend it to the future. Each time price makes a pullback to the trend line, you take a buy trade. Each time price makes a pullback to the trend line, you take a buy trade. So in this scenario, the trend line is now acting as a support level, holding onto the price, but the price is heading up, making series of higher high and higher low. So that is what we call the bounce. But now we're going to look at the trend line break. So the trend line break signifies a break of structure. It means that the market have changed from a particular trend to another trend. Like if the market was previously in an uptrend and price breaks below the trend line, it signals that a new downtrend has begun. So once a trend line breaks happen, you are expected to trade in the direction of the breakout. So that's what I call it, a trend line break. So this time around, you are not trending bounce, because this time the price has successfully broken the trend line. So this now tells you that there is a break of structure in the market, a new trend has begun. So it is now left for you to join the new trend as it has already formed, not when it has traveled so far. So once you join the trend when it was newly formed, you'll be able to ride massive trend, and once you ride massive trend, you'll be able to make so much money. So this is what we call the trend line break. So if you watch, you see that this price has been trending up. This market has been trending up. You can see the upper channel and the lower channel. So this is the trend line connected below, and this is the trend line connected above. So if you watch, you see that the price is currently going up, going up, going up, making series of higher high and higher low, breaking series of highs. That shows that the market is going up. So here you can clearly take buy trade from the trend line. Each time price makes a pullback to the trend line, you take a buy trade. Each time price makes a pullback to the trend line, you take a buy trade. Each time price makes a pullback to the trend line, you take a buy trade. And each time price makes a pullback to the trend line, you take a buy trade. So in this scenario, you buy from the trend line because the trend line is currently acting as what? As a support level. So now what happened here? what happened here is what we call the breakout. So this time around, as the price came to the trend line, instead of the price to bounce off from the trend line just the way it does here, it comes, it bounces off, it comes, it bounces off, it comes, it bounces off, comes again, bounce off, comes again, bounce off. So here, when the price now came back again to the trend line, instead of the price to bounce off as usual, the price breaks below the trend line. So this is what we call the trend line break. In other words, you can call it a breakout. So once the breakout is confirmed, you are expected to trade in the direction of the breakout. So this time you are expected to take a sell trade because a new trend has begun. So you can clearly see the movement was very massive. You can see the movement. So this is what we call breakout, trend break. So you can clearly see that I've shown and I've shared so many examples on the bounce. So this is what we call the breakout. So once you've confirmed that the trend line has been successfully break through, that is when you are expected to do what? To take a sell trade. So there are two things you should take into consideration. You can take a sell trade when the breakout happens, or you can wait for what? A pullback to the trend line. But most of the time, sometimes the price hardly comes back to retest the trend line. So if you watch here, you see that as the price breaks below the trend line, the price didn't come back to retest the trend line. So this is the new highs that the price formed, right? So you can see this the point that the price got to, and then continue to collapse down. Some traders will be waiting for the price to come here to test the trend line, but unfortunately the price didn't come to the trend line. So in this scenario, what you now need is the moving average. So if you are able to plot the moving average like the 20 exponential moving average, you will now see that the moving average will be able to hold onto this price, right? So you'll be able to take a sell trade at this point, because this is the point where the moving average will hold, because the moving average is like a ring line, that a line that looks like a ring, right? So once you plot out the moving average, you see that the moving average will be able to hold onto this price, telling you that this is the point where you are expected to take a sell trade. So you only trade in the direction of the trend. So this is what we call the breakout. So with this, I believe you have learned a lot about the trend line and how you can use it to make money consistently in the forex market. Like I said, if you're able to master this trend line strategy, you'll be making money consistently, $100 consistently, depending on your capital. Like I say, if you have $10,000 in your capital and you are risking just 1% of that $10,000, you'll be making $100 every day in the forex market. But if you have $100,000 as your trading capital, then you will be making $1,000 every day in the forex market. So the higher your capital, the higher your income. So make sure you backtest this strategy on a demo account before using it on a live account, so as to be sure that this strategy is working perfectly well for you. So this is where we'll come to the end of this video. Please make sure you subscribe to my channel, turn on the notification icon to be notified whenever I drop new content, and don't forget to turn on the notification icon to be the first to be notified whenever I drop new content. I will see you again in my next update. Enjoy the rest of your day.